Hello everyone, welcome back. Today we'll be talking about Bitcoin. Bitcoin is the world's first decentralized digital currency, and it has achieved an extraordinary milestone by surpassing a valuation of $100,000 per coin. This landmark moment signifies a monumental shift in the financial and technological landscape, highlighting the growing mainstream acceptance of cryptocurrencies and their potential to reshape the global economy. From its humble beginnings as a niche experiment in 2009 to its current role as a cornerstone of digital finance, Bitcoin's journey has been revolutionary. This achievement underscores the increasing recognition of blockchain technology, the transformative power of decentralization, and the global demand for alternative financial systems. When Bitcoin was introduced in 2009 by the pseudonyms Satoshi Nakamoto, it was envisioned as a peer-to-peer digital currency, free from government interference or control. Initially dismissed as a fringe innovation with limited utility, Bitcoin has steadily gained traction over the years. Today, surpassing the $100,000 mark demonstrates its evolution into a robust financial asset that rivals traditional investment vehicles such as gold. Its appeal lies in its potential for significant returns and its ability to serve as a store of value, especially in a world increasingly wary of inflation and fiat currency debasement. Bitcoin's surge in value results from a confluence of factors ranging from technological advances to macroeconomic shifts and evolving investor sentiment. Institutional adoption has played an instrumental in legitimizing Bitcoin as a viable investment. High-profile endorsements and substantial investments from companies such as Tesla, MicroStrategy, and PayPal have bolstered confidence in Bitcoin's long-term potential. Hedge funds and asset managers have begun to include Bitcoin in their portfolios, viewing it as a hedge against inflation and an uncorrelated asset class that offers diversification benefits. In addition, governments and regulators worldwide are establishing frameworks for cryptocurrency trading and taxation. This emerging regulatory clarity, while still evolving, has elevated some of the uncertainty that once prevented mainstream adoption. Nations like the United States are exploring ways to regulate the cryptocurrency market without stifling innovation, while countries like El Salvador have taken the unprecedented step of adopting Bitcoin as legal tender. These developments underscore a growing acceptance of Bitcoin within traditional financial and government institutions. The global economic environment has been pivotal in Bitcoin's rise. The COVID-19 pandemic prompted unprecedented monetary policies, including massive money printing and historically low interest rates. While these measures were intended to stabilize economies, they raised concerns about inflation and the long-term stability of fiat currencies. Bitcoin's fixed supply of 21 million coins makes it inherently deflationary, offering an attractive alternative for investors looking to preserve their wealth. This narrative has particularly resonated with younger generations who are more open to digital innovation and skeptical of traditional financial systems. Despite its meteoric rise, Bitcoin's journey to $100,000 has been fraught with challenges. Its high volatility remains a point of contention, with critics arguing that its price fluctuations undermine its utility as a stable currency or reliable investment. Bitcoin's history has been marked by dramatic booms and busts, with periods of rapid growth often followed by sharp corrections. This unpredictability has fueled skepticism among traditional investors and policymakers, many of whom remain wary of the long-term stability of cryptocurrencies. Environmental concerns also loom large. The energy-intensive process of mining Bitcoin has drawn criticism for its significant carbon footprint, especially as the world grapples with the urgent need to address climate change. Efforts are underway to make mining more sustainable by adopting renewable energy sources, but the debate over Bitcoin's environmental impact remains a contentious issue. Regulatory uncertainty is another major hurdle. While some governments have embraced Bitcoin, others have taken a more cautious or outright hostile stance. China, for example, has imposed strict restrictions on cryptocurrency trading and mining, citing concerns about financial stability and illicit activity. Meanwhile, the US and Europe are exploring balanced regulatory approaches that aim to protect consumers and prevent abuse without stifling innovation. The outcome of these regulatory efforts will have a profound impact on the future of Bitcoin. Bitcoin's rise to $100,000 is not just a financial milestone, it represents a cultural shift in how people perceive and interact with money. Younger generations, in particular, are driving this change, seeing digital assets as a natural evolution in an increasingly digital world. This shift is forcing traditional financial institutions to adapt, and many are now exploring ways to integrate blockchain technology and offer cryptocurrency related services to meet changing consumer preferences. Blockchain technology, the foundation of Bitcoin, is also gaining traction beyond cryptocurrencies. Its promise of transparency, security, and decentralization is being explored in sectors ranging from supply chain management to healthcare to voting systems. The growing recognition of blockchain's potential has further legitimized Bitcoin and other cryptocurrencies, positioning them as integral components of the digital economy. As Bitcoin reaches its historic milestone, questions about its future trajectory abound. Will it continue to rise, potentially reaching valuations of $200,000 in the future or more? Or is a market correction inevitable? Proponents argue that as adoption grows and blockchain technology becomes more embedded in the global financial system, Bitcoin's value could soar even higher. Others warn that speculative bubbles and external shocks could lead to significant downturns, emphasizing the need for cautious investment strategies. Geopolitically, Bitcoin is challenging the dominance of traditional reserve currencies such as the US dollar. Central banks around the world are responding by exporting their digital currencies, known as central bank digital currencies or CBDCs. China's digital yuan, which is already in advanced pilot stages, exemplifies this trend. The interplay between decentralized cryptocurrencies like Bitcoin and government backed digital currencies will shape the future of global monetary systems and potentially redefine the balance of financial power. Bitcoin reaching $100,000 is a watershed moment in the history of finance and technology. It underscores the resilience and transformative potential of cryptocurrencies while also highlighting the challenges and uncertainties that remain. As Bitcoin continues to evolve, it will influence not only global financial dynamics, but also broader societal attitudes toward money, technology, and governance. The road ahead will require a careful balance between fostering innovation and implementing effective regulation. Policymakers, investors, and innovators alike must work together to harness the opportunities presented by Bitcoin and blockchain technology while addressing their risks and limitations. Regardless of its future trajectory, Bitcoin's rise to $100,000 marks a defining chapter in the financial landscape of the 21st century, a moment that will undoubtedly be remembered as a defining chapter in the ongoing evolution of money. And this is the end of our video about Bitcoin. Thanks for watching. If you enjoy our videos, please consider subscribing. As always, it was Hansel Times.